YouTube, what's good with y'all boys, man? Hopefully y'all enjoyed the last video. Hopefully y'all had a good trading week. Hopefully you ended profitably. You know what I'm saying? Take the time, use the weekend to back test, figure out what you did right, figure out what you did wrong. You know what I'm saying? And get ready to attack next week with a clear mind and a strong bias. You know what I'm saying? But as y'all can tell by the title, we're going to be talking about liquidity sweeps, man, because I feel like that is a good topic to talk about. I feel like people, you know what I'm saying, if you're a beginner and you don't know what liquidity is, you probably are the liquidity. You know what I'm saying? And liquidity is just basically resting money to fill, you know what I'm saying, price action. Keep price action moving, right? Kind of like gas for your car. You need gas in your car to keep the car moving. Liquidity keeps the market moving. You can find liquidity under highs and lows, order blocks, all of that good stuff. Any type of market structure points, liquidity will sit. Triple highs, double highs, whatever you call it. You know what I'm saying? All of that good stuff. Liquidity will rest above that. That's why that's why price will go up to it, tap at it, and then turn right back around. It's a sweep. You just needed to grab this little extra momentum real quick to carry on. You know what I'm saying? You just gotta know where it's at in the market. And if it's, you know what I'm saying, you can either target it or wait for it to get hit and then trade it, you know what I'm saying, to the opposite side. But it's just all about what the market is giving you. You gotta be flexible when you're trading. You may not get your setup every day, or you may have a long bias, but your long bias may get invalidated, and now you're looking for shorts. You got to be able to switch. You got to be unbiased. You know what I'm saying? You got to take what the market is giving you. But liquidity is still one of the strongest confluences because, again, it works. You know what I'm saying? Sweeping highs and sweeping lows. That's what the market is going to do. It's market structure points. That's how you develop a trend. But I'm gonna throw y'all to the charts, man. We can tap in and let me show y'all some examples of liquidity sweeps. Because that's my strategy. Liquidity sweep into a fair value gap, or liquidity sweep in inverse of a fair value gap. Not into off the reaction. Nice and simple, man. You gotta keep your trading strategy simple. Don't overcomplicate it. Don't have all these indicators on your screen. Your chart should look like a fucking rainbow. You don't need all that shit to tell where the price is going. But you'll get all that shit with market experience, though. You know what I'm saying? As time goes on, the more you be in the markets, the more you watching the candlesticks. Have y'all ever just like sat down and watched how a session actually moved? See what it did when it hit certain levels? You know what I'm saying? You should just sit back and watch the candlesticks move, just so you can get a feel of how price action actually works. You know what I'm saying? But that's all I got for now. So I'm going to throw y'all to the charts and get into these examples, man. I'm going to stop yapping. Alright, YouTube. Chart work. So, we're going to start it with Euro USD. We're on a 15-minute time frame. I feel like that's a pretty decent, you know what I'm saying, decent time frame. So, as y'all can see, well, first, let's go up here. We'll draw liquidity sweeps first. So, there's the high. You know what I'm saying? That would be the low. So let's just say we're doing this right here. But we come up, take that out, and then we keep going. Right? Where's the sweep at? It would be above the high. Right? Because we swept the high and we closed below. Probably be a fair value gap in there, or a, you know what I'm saying, engulfing candlestick, whatever the case may be, whatever confluence that you use, it'll probably be in this move, in this leg down. And then even if you miss that, you could probably enter on the retest. When we come back, boom, and then we keep going down. We'll show it to the downside too. So, boom, we're coming down. There's our low. Boom. We dancing. Come down. Sweep. and keep going up. See, the reason for sweeps is because most people, when we're coming down, they buy the dip. So we'll have stop losses, you know what I'm saying, down here. Dang, I did that wrong. Fuck it. My bad, y'all. Boom. So a lot of people will have their stop loss underneath this low. So what they would like to do is manipulate that to have more money, you know what I'm saying? They greedy to, you know what I'm saying, make more money. So they dump the price down, manipulate price down, sweep the low, and then everybody buys it back. So now you just added money into the market. Because for every winner, there has to be a loser. So that's the whole point of the sweep. Sweeping you out. Get you up out of there. You know what I'm saying? Even though they probably don't even see your position. Because they're dealing with so much money, you don't even freaking matter, to be honest. But it's the same thing. People will have sales right here. So like, boom, we reach the peak. And we enter for a sell. Because probably fair value gap over here. Inverse. Stop loss above the high. Right? We almost had take profit. Price reverse. Sweeps it out. And then comes and takes out this low. Which would be the same scenario right here. Because now we would have this low right here. Boom, it comes down. Sweep it again. And then keep going up. That's how you get your market structure. And liquidity sweeps, I mean. So now let's go to the charts themselves. And let's see if we can find a real example. Right here. These are lows. We got to move up and a move down to draw liquidity. Move up, move down, draw liquidity. Alright, we'll delete this one just for the sake of my eyesight. You know what I'm saying? What happens? We sweep it, have our move up. There's a candlestick leg. That was a perfect reaction off of these lows. And then we swept it again. See how we closed above it still, but we got the wick that goes below it. That's what you really want to see. But sometimes you may not get that. Sometimes the candlestick will actually close below the low, which is fine too. That's just more confirmation that we fully, completely swept it. You know what I'm saying? Because as you can see, we did the same thing right here. Candlestick wick, close above. And we still came back down. So that would have took some more people out right there. That would have been another sweep to have news. To have to move up. But even then, this was a news day. So that could have been heavily manipulated too. But still an example of what a sweep would look like if that wasn't a news candlestick. You know what I'm saying? Even right here, equal highs, swept, moved down. You know what I'm saying? You know what I'm saying? Liquidity sweep. I entered late, so that's why I entered off of this pullback right here. Liquidity sweep. It's my trade right here. Move down, move up. Boom. Sweep, move down. And if I bring up my session times, can you get the gist now? Like, is it starting to click? A session will manipulate, like, boom, right here. New York and London session overlapping highs, right? We chopped. Asia session open, manipulated, swept that New York and London high and dumped. You know what I'm saying? We've been having so much news. This is actually kind of crazy. That candlestick is insane. Like, look at this right here. Like, all of these lows right here was just magnets. It's like a magnet. We swept it again, swept, bam. But I'm not gonna lie. This was a news candlestick again. So it's not really very good examples right now. Because a lot of it is just news. But here's a sweep. We still had to move up. Right here. Asian session. Chopping. New York came down, swept it. Major move up. You know what I'm saying? Right here. New York low. Asian came up a little bit, came down, swept it, then had a real move. This is absolutely insane. What the hell? All of this is a sweep. You know what I'm saying? Like these lows. Swept, 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 swept. You know what I'm saying? You just know. Like right here. New York, low. Came down, finally swept it, boom, move up. What more do you want? Do I need to continue? New York, Asian session overlapping low, overlapping high right there. Finally came up, swept it, moved down. You know what I'm saying? Boom, boom. And that was a new day opening gap too. Beautiful. But the reason why I say you must wait for liquidity sweeps is because stuff like this. See how London session came up a little bit, swept these highs, and then we had a slow move down, swept some more lows, and then we turn around. New York session opened and reversed all of that. I mean, to be fair, me personally, I would have been out of the trade before New York session opened. So after we swept these highs, I would have been out as soon as we swept the lows. I be in and out of the markets, bro. My trades don't last more than an hour, hour and a half tops. Cause I'm literally trading that first London session open. The first hour of London. Like this right here. Probably was a fair value gap in there somewhere. Actually, I don't think it was. Unless I got this off. I don't know. It looks like there should be a fair value gap in there. But, oh well. You can go to ES and NQ. Bro. Hold up. I've never actually looked at these charts on here. But even right here, literally first example, right there, and straight in your face. Lows, lows, swept, and massive move up. You know what I'm saying? Like, move up and a move down right here, sweet, move up. Yeah. You can see my screen is lagging for y'all. Boom. Low, sweep, move up. And could have entered at the retest of this fair value gap right here. Move up. Come on, man. If it lows right, bro, look at this. Triple. You know what I'm saying? Sweep work. Sweep work. What more do you want from me, my friend? What more do you want from me? Which I want to go to Bitcoin, because ain't no point of looking at NQ. They pretty much the same shit. What the fuck going on now? Oh shit. I hate when it loads in like that. Right here. Literally. Bam, 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 bam. Sweep work. Move up. Liquidity is everywhere, my friend. Like, liquidity sits above here, but these never got really swept yet, so I'm not gonna really count it. This low got swept by these three, but you gotta be, see what I'm saying? You gotta be patient. Make sure it's a correct sweep. Because we could target liquidity and we could blow right through it. But I don't know, it just depends on what, again, it depends on what the market is giving you. Let's go to the hourly time frame. I actually want to look at Bitcoin. Just a pit stop real quick. God damn. We're chilling at 117 though. That's not bad. We sweeping some lows right now. Let's see what happens. Well, you're not gonna see any major movement right now, but y'all will know in this video later on. I want to look at Solana because I actually bought some Solana. So crypto pit stop. Sorry. I entered down here. I might buy some more up here too. I'm not gonna lie. But hopefully I'm explaining this to y'all in a way that y'all understand, because I'm explaining it to the best of my ability. It's literally like sweeping highs and lows. It's a simple strategy, but it's so effective. You know what I'm saying? Let me get back to this real quick. Like, you got a low point, you sweep it, have a reaction back to the upside. We're just grabbing the extra money, the resting money. Same thing with the highs. There's stop losses up here. It's a structure point. So it's a magnet for price to come back to and take it out and keep moving, or take it out, you know what I'm saying, retest and continue to go up. That's why I said you gotta wait for either a fair value gap or an inverse of a fair value gap. But then if you get the fair value gap to the upside, so let's say if we get something like this, boom, boom. So now we sweep the high, we broke the high, and we come back and retest a fair value gap that's probably in here, or whatever caused the move. Now we keep going higher, right? Or we pretty much will get this over here. So you just gotta make sure that it's actually going to reverse. You gotta wait for that confirmation, that confluence, rather than sweeping it. You think this is a sweep, but then it's just retested and continuing the trend. So that's just something to be mindful about when you're trading liquidity. You gotta take everything with a grain of salt, man. You gotta take what the market is giving you also. I can't stress that enough. But I'm gonna stop yapping, man. Hopefully I explain this to you again. Liquidity is, yeah, it's that. It's my main confluence. Besides SMTs and fair value gaps, liquidity is number one. That's my top three. Liquidity, liquidity, fair value gap, and SMTs. That's the top three. But anyways, man, I'm gonna stop yapping, man. I'm gonna get ready to edit this video so I can drop it for y'all. I might do a video on fair value gaps too. Y'all let me know if y'all want to see that in the comment section down below, man. Y'all like, comment, subscribe. Hopefully y'all stay blessed, man. And hopefully you enjoyed the video. And let me know what y'all want to see in the comment section.